So I wanted to go over with you the sustainability part that we want to incorporate into the valuation, into the model. The presentation, the project that you're working on is essentially about looking at a company, forecasting its earnings, making the valuation model, expressing how are they going to create a strategy, what is driving their growth. And the piece that is very important to put into that in the current risk management context is this idea of sustainability. And what I use is a methodology that KPMG has developed called the True Value methodology, and I believe, is a proprietary method that they use to assess risk management and recommend risk management improvements and consulting to clients that are working right now. And this is very current. This is in the marketplace right now. So the main points that you want to think in the context of your project and in the context of risk management right now is this materiality assessment that we're going to look at. And also, what are investors looking for? When investors from the investment community are looking at these things, what are they considering? And then how do you communicate value of ESG metrics? Okay, so some of the things that I wanted to go over first is what is materiality? Okay, so what is materiality? This is actually comes out of the public accounting CPA firm, a tool term that is used to say, oh, this is something that's relevant. This is something that's not relevant. The major legal rule is financial statements need to include everything that is material to the investor in order for them to make an investment decision. Is it material? It means is it large enough to make the investment and that potential investor change their opinion about whether they're going to invest in a business or not based on the disclosure or lack of disclosure. So for materiality, how do you think about what is material in terms of sustainability? This is the idea of basically talking about what is relevant right now in the setting of the business that you're examining. For example, KPMG, they looked at Coca-Cola, and this is actually from Coca-Cola's assessment of their own business. And this is what they discovered. They made this map here, and and this is increasing current or potential impact on Coca-Cola, and this is increasing concern to stakeholders. So this is kind of like what's important to stakeholders or what's important and can impact the Coca-Cola system. And what they found, the more material is the obesity concerns and category perception as the most material, then water, then packaging. So all these things that usually people talk and as we generalize the ESG is actually not relevant in the situation. And I looked in the prior semester at this company and looking at their financial analysis, and their entire balance sheet and valuation and research, equity research analysis revolved around this restructuring of moving away from these sugary drinks to less sugary drinks, and moving from providing things that may not be as healthy to providing things that are more healthy. The entire business was driven by this. So this is a very interesting way to look at the business and start thinking about ways of, internally for management, of course, to quantify these things and understand how to improve practices inside, and externally how to report to concerned stakeholders. But it's very interesting what intersects ultimately between stakeholders and Coca-Cola inside here actually is the same 3-4 items, and everything that's above the curve line here is material. So materiality helps us assess what to focus on so that we're laser focused on what's doing. Again, this is with Starbucks. We have here of what actually ends up being very important, and this is to stakeholders and to Starbucks inside, what ends up being very important is the purchasing practice, growth and expansion, environmental impact, health and wellness, workplace practices. So these are the things, and you can see the stakeholders, the coffee purchasing practices. So it can be very interesting what's more important to stakeholders versus what's more important to the company internally, and how that intersects. And for your project with the ESGs, consider looking also at the sustainable development goals and how where your company falls between these goals as they're now being actually put into practice. These goals are being reflected in the 10K reports and the annual reports this coming year. Um, and how to report on these goals and how to incorporate them into the company. Some of the companies are doing this year now. And from the investor perspective, a lot of investors are now looking for transparency. They're looking for a way to create buy-in within their organization regarding certain ESG scores, certain ESG metrics, and make sure their business model is aligned with the type of ESG reporting that is being delivered to them by investee companies or investee public companies. This is the how fast the asset management world is growing in this category. And this is how many assets are going to be managed under certain sustainable metrics. In US trillion, we see here this is growing quite a bit, and the reporting requirements are changing, and it's a very relatively new space, but right now a lot of people are coming on board and reporting on this. So for your project, what needs to be done, and there's the example that's posted there as part of the assignment, but just to look and see on Yahoo Finance what is the ESG score. It's a new metric on Yahoo Finance as well. And if you find other reports, other information, try to corroborate some of these data points so you see maybe a trend of where they've been moving. What is material? Look at their sustainability report. Is there a materiality map there? And just make sure that you focus on assessing the material issues in this. And I'm looking forward to see your project in this section as part of it.